Hi friends, welcome back to the channel. We're going to be talking about which companies are reporting earnings this week, a little bit of the daily news, and also some things that Howard Marks said, because I think it's actually really quite interesting. So let's just jump right in. So this is the earnings calendar for this week, according to TipRanks, sort of the most anticipated ones coming up. And Monday is going to be Charles Schwab. So we're going to see like how are these sort of mid-sized / smaller banks doing? And in particular, we want to be watching, are people pulling out so many deposits that these banks are going to have a tough time? And moreover, are they going to be actually charging fees in the future? Because at the moment, these kind of banks essentially, they thrive on lower fees and essentially attract, customers to their platforms. Tuesday, you got Goldman Sachs, you got Netflix, Bank of America, United Airlines, Johnson Johnson, Lockheed. It is a lot, actually. So J&J and Lockheed are good dividend stalwarts. Say like your investment bank like the Goldman Sachs or another bank like Bank of America, have they weathered the banking crisis storm? We're going to find out. What's going on with Netflix. Are people canceling? Are people adding? Part of the thing that with Netflix is that their shows were well over budgeted. That was a big thing, and they kind of expected unlimited growth, but in a recession, essentially people looking to cut costs. And are they cutting Netflix? So we're going to find out. United Airlines is an interesting one, and any of the airlines are. Because I don't think like travel is going to go away anytime soon, right? That's not a thing. We're going to be flying on airplanes. But the question is, are airlines doing it at a profit? My understanding is that people are coming back, and we're going to see what their forecasts are and how are they doing with staffing levels, because a lot of the employees into the airlines have been wanting to get out, give me my money, give me my severance. I just don't want to deal with crazy customers anymore. And I'd be curious to see what they say. The big one and most popular one this week will be Tesla. That'll be on Wednesday after hours. They are a profitable company, but are they profitable enough to justify their current stock price? Well, we're going to find out. Morgan Stanley's coming up. Actually, LVS, what I believe that's was at Las Vegas Sands. They've had a pretty good run since May. I was looking at the chart, and it's like nearly doubled. And this sort of goes back to, and I'm just sharing with you guys, if you want to make YouTube videos, you're better off just making Tesla videos all day, every day, because it's the most popular retail stock. However, with that said, and this is why I want to show you this list, there's a lot of companies out there in the world. There's more than just Elon Musk CEO, and there's more than just Tesla. There's a lot of companies out there in the world, but you guys, I really get it. I get it more than the way the algorithm works. You're better off just doing the popular companies. However, I just want to show you guys that there's way more out there than just Tesla. But yes, Tesla does report on Wednesday. You also got IBM and Discover Financial Services. I think IBM's an interesting stalwart. They are into cloud, they're in AI as well. They are a legacy company, so they're considered not cool, but they do make money. And then on Thursday, we're going to be taking a look at TNT, a big dividend stock. Now, Philip Morris, PM is an interesting one because essentially less people are smoking in the USA, but they are expanding overseas, right? So that's something that's going on with them. And they've been a steady dividend stock for years. However, they may change. And that depends on whether you think tobacco is going to stick around or not. Now, I know for people who are addicted to this stuff, yes, it will stick around, but are their user numbers growing? And I know recently they had some interesting news to where they had an e-cigarette thing and whether the government is going to approve that to be on shelves. I remember reading about that. American Express, an interesting one. So that's a Warren Buffett stock. Essentially, that is tied to both consumer spending and to business travelers. So it is essentially business travel coming back. I'm not sure, because essentially we live in a Zoom world now, and we can do so many meetings, frankly, online. However, it's not like people are going to stop, meeting a person and shaking hands. But the question is by how much? Are people itching to get out of the house and do those business meetings again and do business travel, or are they just going to be switching over to Zoom? I'd love to hear your guys' thoughts on that. Taiwan Semi's also on Thursday. Remember, Warren Buffett was dumping said stock, saying that he's a bit concerned about the war. So I'll be curious what their earnings reports come back at. Friday, you got Procter & Gamble, which is another big stalwart dividend stock. It's one of those ones that, it's not like we're going to stop, using toothpaste or laundry detergent, these kind of things. They make a slew of products. I could go through all of them. And if you guys know P&G, they make quite a bit. So that's what's coming up this week, and we'll keep an eye on that. When you look at sort of news around the market, it's funny. You get fund managers that will say, well, we're going to have an earnings apocalypse, which, actually the earnings starts this week, meaning that companies will come back and they say, hey guys, we're not earning, so much money anymore. And that'll cause a downturn in stocks. You have other people saying, no, we bottomed out already and we started a new bull market. I'm just telling you there's different views on this. I'm a little bit leery on that. I don't necessarily go with that. But this is sort of where I go to all the time when I say, you just want to sort of diversify so that you're not dependent on any one thing, right? So if you're a little bit more bearish in the market, so that would mean then say, okay, I'm still going to, put some of my portfolio in stocks, but I'm going to be paying off debt. I'm going to be holding some cash. I might be, I'm paying off my mortgage, these kind of things, by my credit cards, and you sort of allocate accordingly. It doesn't mean you just abandon, all hope exactly, but essentially you allocate to what you're thinking your forecast is. And I'm just telling you, there's a couple different ones. One is either the Fed is going to be pausing the rest of the year, and things are going to be a little bit hairy when earnings come out, or another, to the more the bull case scenario, his hey, we've bottomed out. The bad news is already priced in. We've been talking the recession for quite a while, and how much worse can it get, right? That's sort of the couple conflicting views on that. Now, if you take a look at a chart here, so this is an interesting one, sort of like the S&P performance, sort of like, quarter over quarter, we've been sort of in this downward trend, and is that essentially going to break? Well, we're going to find out with earnings. So that's why I point these guys out to you. And also too, it always depends who you ask. And like I said, I'm a little bit more on the bear side. However, I do acknowledge that, I could be totally wrong. And I think that's part of life, and that's part of the markets. And this is sort of why I try to give you guys a full picture of what's going on, the best of my ability. So if we flip over the Reuters, they're going to be talking about a few of the projections that they have for different industries and regarding their earnings. I want to show you guys this. You can see here, you got, they're saying maybe just consumer discretionary is going to have a good quarter, followed by industrials and energy. And then they're also saying that perhaps real estate will be down, utilities, tech, healthcare, and materials. So over Reuters, they tend to be a little bit more bearish than what you'll find over, say, like the Wall Street Journal or a Bloomberg. But Reuters is a slightly different. It's not necessarily a financial-only publication, so they don't necessarily have the incentive to keep people invested like, say, the other publications do. So I just want to show you guys this, get your thoughts on this one. The things that stand out to me, if you're looking to say, go long on the upside, energy industrials, yeah, I would say probably energy is a good chance of maintaining strong. I'm not so certain about industrials, and just consumer discretionary earnings growth. So that would probably rest on the case that essentially, people really, really cut back, and those type of companies really took a hit, right? Consumer discretionary, and maybe they're going to say, hey, you know what, we've bottomed out and we're still here, but we'll see. I think one of the things, like just for example, like you look at like the scary companies, like say a Bed Bath & Beyond, something like that, really, really took a hit and may not come back. Whereas something like, I'm just giving you an example, the Vans Corporation, which is kind of an interesting one. They also have North Face in there, and that's basically, shoes and outdoor gear. Well, those kind of companies essentially say, hey, people completely abandoned, buying that kind of stuff. But we're still here, and we're going to survive, and our financials look good. So I'll be curious if this one's indeed, and actually we may come back and check if these are the three industries that do well. But overall, they tend to be a little bit more bearish, as you guys can see here on this chart. Now, I wanted to go over some things that Howard Marks says. He recently gave an interview, covered Bitcoin, AI, these kind of things. Howard Marks went to my school. I've actually met him. It was in LA. It was over at Oak Tree. It was actually really, really quite interesting, some of the things he had to say. And even when it was an alumni event, back then it was like really profound. This was, I guess, 3 years ago already. And just to always hear what he has to say is really interesting. So here's a couple of quotes, and share my thoughts, and also look at what he's saying. So number one, this is Howard Marks. He says, the declining interest rates were responsible for the majority of all of the money that's been made in the last 45 years. So basically he's saying, interest rates are low forever because essentially, this is sort of our policy to expand. And if you're making money, it's due to interest rates. So now, obviously, this is going to be a sea change now that they're no longer doing that. Howard Marks is also saying the rates are high today to fight inflation. I don't think they're going to stay this high, but they're through coming down in any major way, and they're through being ultra low. So I think these are interesting points, right? So he's not like saying, hey guys, we got this crazy new bull market happening again. He's just saying, money's been made from low interest rates, and don't expect that to come back. That's basically what it is. What else does Howard Marks say? I just think it's too good to be true to think we can have a credit card we never have to pay the balance on. And essentially, this is something that I've been warning you guys about as well. is to pay off those variable interest rate credit cards. And essentially Howard Marks is warning that, that kind of thing where people just ignore their credit cards because interest rates weren't that, high, is coming to an end as well, right? This all revolving around the change in interest rates. He also had some things to say about AI, which I think are fun. We'll read it here. AI, just like passive investing and machine learning, even maybe to a greater extent, will knock out everybody who doesn't add value. It should be harder and harder and harder to run money and paid highly for producing inferior. But hopefully there will be still a small group of people who can do something that machine can't do. And he has a couple other points related to this, but the basic gist of it is that if you want to survive in an AI-driven world, right, essentially you have to be able to do things that the machines can't do. And it's just something I emphasize on this channel as well, right? I just think it's coming. It's sort of putting your head in the sand if you think AI is not going to take some jobs. It definitely is going to take some jobs, the same way that the computer replaced, some people's jobs. Your jobs essentially became obsolete. It doesn't mean it's the end of the world. It just means you need to adapt to the changing environment. And as Howard Marks states it, you need to be able to add value and do things that the AI can't do. He goes on to say as well, which is interesting, can AI-enabled computers sit down with CEOs and figure out which one is Steve Jobs? Can it sit down with 5 business plans and figure out which one is Amazon? I don't think so. This is an art form. And this is a great example of, why we still do need humans. It's a real thing, right? Like, can an AI, read, say, the biographies of, 5 different perspective venture capitalist, type of thing and say, okay, these are the people I want to do business with. These are the ones that, are great at predicting the future. Or can it, decide, which CEO is great at running a company, right? These still need to be determined by humans. So that's, obviously maybe AI like way in advance can do that. But at the moment, no, AI can't decide these kind of things. They can't tell you which business plan is going to be the next Amazon. Not that I acknowledge. I mean, I'd love to hear your thoughts on this one. But I do agree with the whole overall sentiment that Howard Marks is saying here is that, yes, AI will replace some jobs, but not necessarily these kind of things. Here's some more stuff that Howard Marks said. I enjoy sharing this stuff with you guys. There are people who believe that when you have a bank crisis, talking about banks now, like we did with Silicon Valley Bank and some others, that the weakness of banks shows the strength of Bitcoin. So he's talking about crypto now. It's in many ways an anti-bank play. It does seem that there is good use for some coins, right? Some coins. And Bitcoin seems to be the one in the lead so far. So it's interesting. So he's one of the more traditional investor people that is completely bearish on coins, saying that, you guys can see here that Bitcoin is the anti-bank coin, but he is saying some coins. And I hope you guys do be careful out there, because I would say with crypto, the vast majority of these things are scams. I'm not into Bitcoin myself, but I do concede that if you are to give me these things, I wouldn't venture too far out of the main ones. That's just my personal opinion on that one. And I think Howard Marks kind of has the same opinion as well. And I want to point out this one in particular because it really stood out to me. This is about humility. See what Howard Marks has to say. Humility is a really important thing, especially in the market, which humbles us all. Anybody who doesn't allow humility in a field where there's randomness and uncertainty and qualitative and subjective things are important is riding for a fall. And I like to read these kind of things to you guys and share, because sometimes there's this culture out there on YouTube, and I see it quite a bit, where you have these people like promising you that they have all the secrets, they're going to, buy their class and you'll beat the market and you're going to be awesome, these kind of stuff. And like Howard Marks is legitimately one of the best investor people out there, the same way as like Warren Buffett, these kind of things. And they talk about getting things wrong. They talk about humility, right? They talk about making mistakes. And essentially what happens is that the more experienced you are with this and the more confident you are in your ability, the more that you're willing to say, hey, you know what? I don't get everything right. And that's a good thing. That is a good thing, to be humble and have some humility. And I just want to point this out. Even the best say that. And so this is sort of why something I've learned on the chat, you guys say a lot. I'll say, hey guys, I don't necessarily know everything. And that's sort of why we have a community to sort of pool resources and help each other. And I think that's great. I think you should be leery about the people who say they do know everything and buy my class, bro, because trust me. Hope you guys understand my point of view and why I point that out. Here's another one that Howard Marks said. It's a funny quote. He says this more than once, so it's sort of an older one, but it is still a funny one to read. People used to talk about the factory of the future, which would have one man and one dog, right? The factory of the future, one man, one dog. It was the dog's job to keep the man from touching the equipment. It was the man's job to feed the dog. I would like to have the Fed keep its hands off the machinery most of the time. So that's a common thing that you'll find among people who are in the investing class. They sort of want to essentially have free markets and let things run smoothly, etc. And he doesn't necessarily want to make a direct, how can I say, like statement exactly what the Fed should do, other than keep your hands off. So anyways, there's some thoughts from Howard Marks. There's some thoughts on what's earnings are coming report, and sort of some different perspectives on the market. I'd love to hear your thoughts on any one of these things. Hope you're enjoying the weekend, and I'll catch you in the next video.